Let's talk about a feeling we all know too well in this industry. If you think about it, the traders who tend to struggle the most often tend to be disciplined people. They are often successful in other areas of their life. They crush their jobs, they have things under control in their daily lives, and when they decide to master something, they're usually able to commit, execute, and often get the results that they're really putting their time, energy, and effort into. But then, why, after 1, 2, 3, or sometimes even after 4 years into their trading journey, why do they consistently find themselves taking 2 steps forward, 3 steps backward? Their trading still feels random. They're still stuck in that same frustrating cycle of win big, lose bigger. They know the theory, they've watched all their videos, they've invested in courses, but still, profitability feels miles away. And when traders are constantly experiencing that frustrating cycle, slowly over time, their confidence starts to get shaky. They constantly keep having these thoughts of, is this game rigged? Or am I even cut out for this? The reason most US equity traders stay stuck in their trading is not lack of discipline, intelligence, mindset, or special indicators, but it's because there's a framework gap. If you're trying to build a professional trading business using amateur methods, our results will stay the same. But once we truly understand, not just know, but fully understand it, things start to change really quickly for almost all traders. So in this video, we're going to go over main reasons why a lot of US equity traders who are high achievers in other areas of their lives, why do they stay stuck and struggle with profitability in the markets? But first, how's it going, everybody? If you are a returning viewer, it's great to have you back. And for those of you who are new to this channel, welcome. My name is Shaun. I'm an active US equities trader. Been trading the market since 2017. And on this channel, we talk all about trading and investing in the American stock market. So if you're interested in learning how to trade and becoming a profitable trader, consider subscribing. But starting off with probably the most common trap that a lot of traders fall into, and the trap is the strategy trap. When we first get started with trading, we get interested in the markets, we learn more about trading, and we very quickly figure out that we need a strategy to make trading profitable. And at that stage, our initial 2, 3, or 6 months, this is fine. But any longer than that, then that is a problem. What most traders do is that they never get out of this stage. When most traders try a new strategy, they start with excitement and it works. They get happy, and as they keep trading that strategy, it's only natural that any strategy goes through a few losses. When traders feel that pain of losses, they immediately slip into their high performer hustle mode. They simply do not want to feel that pain again, and they're constantly chasing that same happy place where they win trades. And when in that state, some traders take the route of this strategy doesn't work and I need a better one. And some other traders take the route of optimizing their strategy, trying to make it perfect. They'll either go from trading breakouts, then to moving average crossovers, then to trading counter trend trading, or they'll start adding indicators or refining variables to their existing strategies, and eventually it becomes a completely different strategy altogether. They'll get obsessed with their entries, exits, risk management, you name it. And when this happens, it's because in other areas of our lives, this exact attitude has worked. Our obsession, our dedication, learning more, working longer and harder, and finding ways to be more efficient has worked well for us. Trying to learn more, read more helps us get better, right? But the thing with trading is, it's not so much about knowledge. It's about building a deep understanding of our existing strategies. It's about doing less, but doing better. The illusion most traders have is that if they do more and make their existing strategies better, they'll have a profitable trading strategies that are better than anybody else's. But thinking like this is the exact thing that keeps them stuck. And guys, when I'm saying these things right now, it's not like I'm cut from a special cloth. I was once stuck in the same exact place, wanting to learn new, better strategies and wanting to be the best, because That is the exact same attitude that helped me get in shape, where I went from being obese to relatively fit. That same attitude helped me do better in my career, but in trading, that same attitude becomes completely counterproductive. We simply need to do less, but do it better. The reality is that all consistently profitable traders stick with their same handful of trading strategies, setups, and timeframes. You probably already have a winning strategy hidden somewhere already in your trading journal right now, or maybe in your previous trading results. You most likely don't have a strategy gap. You simply have a process and executions gap. Most traders know what to do. They just need to learn how to do it better under pressure. Traders will have 5 different trading strategies: momentum one day, then trend trading the next, moving average crossovers after that, and then they'll move on to trading reversals, and they never become good at any one of them. Guys, trading is not a knowledge economy, it's an executions economy. Traders need to define their one core strategy that they trade well, one strategy, one market, one time frame, no exceptions, for at least 90 days. This is not a limitation, it's a self-imposed focus. And when this kind of focus is applied, it guarantees your progress. Just stop searching for better strategies and try mastering one strategy that you probably already have, and that also makes the most sense to you emotionally, or at least in terms of understanding. But we need to build a solid foundation on any one strategy first. And by the way, guys, if you really feel that you really don't have a profitable trading strategies, a strong enough edge for current market conditions, or maybe you're trying to apply these solutions that we are discussing, but you're not seeing progress fast enough, and you simply don't want to waste another year going through the same trading losses and no real progress, feel free to check out my mentorship program. It's a much more personalized way I work with traders, where they get the support, guidance, and solutions specific to them and their trading challenges. If you think it might be something for you, feel free to check it out. But moving on to number 2 is mental gymnastics. When traders have picked their one core setup and they've simplified their approach, they run into the second trap, which is mental gymnastics and over-optimization of their strategies. This is where most emotional mistakes actually start. Things like revenge trading, taking profits too soon, or freezing when a trade moves against us. And you're probably already familiar with that crappy feeling when we close a winning trade a little too soon, and then we try to re-enter that trade, trying to make it back, and we end up losing even more money. We usually call that mindset or blame our trading psychology, but in reality, it's a confidence and a structure problem. Here's what actually happens. In the middle of a trade, we try to be both the analyst and the executor at the same time. We are thinking, adjusting, doubting, and tweaking our rules while our money is on the line. And that pressure in real time turns us into a mental gymnast. We end up trying to justify decisions like volume is a bit low and the setup doesn't look that great, but it seems like it's a decent breakout on the daily chart and the news headline looks good, so maybe I'll just tighten my stop loss and take the trade anyways. This is just an example to make a point, but these are the exact same moments how our emotions take over without us even realizing it. Professional traders don't think like this. And if traders want to become consistently profitable in the stock market, this way of thinking has to change. Professional traders operate like pilots. They use a clear and strict operating procedure. Can you imagine a pilot trying to fly an airplane without making sure that they've gone through their checklist and everything looks fine to them? Or can you imagine a CEO of a large company just winging it when they're making major decisions for their company? Or can you imagine going to a doctor for a surgery and the doctor tells you that your MRI looks fine, but my gut feeling, which tends to be pretty accurate most times, and my gut feeling says that you need a surgery, so let's just cut you open. Would you feel confident in that doctor at that point? The point I'm trying to make here is that all these high profile professions like pilot, doctor, CEO, they all follow strict plan because the stakes are too high. And trading might be accessible to everyone, But at the end of the day, it is still a very high or very specialized high stakes profession. And the stakes are even higher for us as retail traders because we are trading our own money. So then, why would we trade the markets with such flexible emotional rules? And if we as traders want to improve and reach the next level, the solution is actually fairly simple. And it is to build ourselves a 5, 7, or 8 point mental checklist that we must check off before every single trade. And everything in that checklist has to be checked off in the form of yes or no. No maybe, no guesses. For example, is the news catalyst good enough for my strategy? Yes or no. Is the stock in a trend? Yes or no. Is the volume elevated? Yes or no. Is this a high quality setup? Yes or no. Is the risk to reward ratio good? Yes or no. When money is not on the line, that's where analysis happens. But once the analysis is done, executions need to be black or white. No gray, no maybe. We must build our checklist, and most importantly, we need to build a habit of sticking to our checklist. And if any of you traders are sure that you really don't have high quality profitable strategies or well-defined trading process, then that's what you need to go after first. Trading your capital is not what you need to be busy with. But once you have your knowledge and framework built, just sticking to that turns traders from stressed out, overthinking analysts into calm, confident traders. And over time, confidence starts to grow, not because of more winning trades, but because they start sticking to their process. And as a byproduct of that, their account also starts to thank them. Moving on to the next one is the flawed feedback loop. Now that there is one main strategy and a clear checklist in place, that's great. That fixes the first two traps. But there's one last trap that keeps traders stuck for years, and that is their review process. Here's what it looks like for a lot of traders. They trade, they lose, they feel bad, they switch strategies, they win, they feel good, then they increase their size, then they lose everything once again. It feels random. It feels like they're doing figure eights. There is no real clarity on what's working and what's not. And without real structure or accountability, they start to think like maybe the market is against me, or maybe I'm just not cut out for this. But that is just not true. Traders trade, then journal their trades. But most traders don't review their trades like professionals do. Their reviewing process usually isn't meticulous or specific enough. And here's what traders can start doing if they really want to improve. This is something I'd like to call a deep review of your trades. Consistency is not built on your next trade, it's built on your daily review. That 30-minute to 1 hour after every trading session is the most important hour for the day of your trading. During a review, check your discipline. Was the checklist followed on every single trade? Understand both your wins and losses. Were those wins random, or were they executed properly? Were those losses just regular losses, meaning you did everything right but probabilities just weren't on your side that day? Or were they rule-based losses, meaning you broke your own rules? And if traders are properly reviewing their trades, they'll notice that most losses were rule-based losses, not from failure of their strategy. And the next step is pretty simple. When you come across a mistake that you're repeatedly making and it is making you lose money regularly, then set yourself one simple goal, just one, and it must be about your executions. For example, I will not trade outside my 2-hour window of the open, or I will not take any setups from the 1-minute chart because market moves a little too fast and I tend to perform better when things are forming on a 5-minute chart, much more slower, and things are much more calmer, for example. And then traders just need to hold themselves accountable until they fix that one trading mistake, and then they simply need to find the second mistake and do the exact same thing again. Fix that, and very quickly you'll realize that all your trading mistakes are consistently going away, and your trading results are also starting to get really good. There's no magical formula to it, guys. It's just pure hard work. But of course, holding yourself accountable just by yourself is a little bit more difficult. And when I'm working with other traders inside my mentorship program, they find it a bit more easier because somebody else is looking at their trading and telling them exactly where are they making those mistakes and giving them exact solutions on what is it exactly that they need to start doing and fix those mistakes. That makes it a little bit more easier. But anyone watching can start doing this on your own too. Just be a little bit more hard on yourself and start fixing one thing at a time. And that's exactly what will turn most traders trading from random to consistent. So there you have it, guys. These are the major reasons majority of traders stay stuck in their trading journey. And these are the same steps that every consistently profitable trader eventually learns to follow. If traders start to change themselves, their trading results will also start to change. But that's about it for this video. If it has helped you gain more clarity, then please hit the like button because it really helps the channel. Subscribe to see more videos just like this one that can help you improve your trading performance. And if you're interested in learning more about the mentorship program, the link is in the description below. Feel free to check it out and decide if it might or might not be something for you. But that's about it for this one. I'll see you in the next video, guys. Take it easy. Cheers.